JJ the CPA here. Hope you're doing well. Before I go through R&D, big subject, want to tell you about my partnership with Western CPE. And they have a series on their YouTube channel called Dear Western. And I am answering questions for those that are emailing those to dearwestern@westerncpe.com. And so you'll find videos on their platform that you're not going to find on my channel related to these questions that are coming in. So, for a rare treat, if we could call it that on this subject, I am now showing you this video that you will find on their platform. And with those videos, they go a little something like this. JJ the CPA here. Hope you're doing well. This just in, hot off the press. Dear Western, if a business does not want to take the R&D tax credit, can they expense those costs instead? Well, I'm going to tell you, this is a loaded question and a variation of the question that we got, because this right here has so many components to it. I'm going to admit to you, I don't act alone. I bring in a great friend of mine, Michael, to help me with a much larger company than my CPA firm, because there's so much to this. Now, with that being said, we're going to run through the basics, but to answer this question, here it is. You no longer can expense R&D costs. So the answer is actually no, but if you don't want to take the R&D credit, you can then amortize them. But to be clear, if you don't take the credit, you got to amortize it. Now, let's start breaking this down right now. Got the whiteboard up here for us. We've got two things we're dealing with here. We've got R&D, the tax credit. I want you to note that that is under IRC 41, meaning Internal Revenue Code Section 41. Why is that important? Because I want to really differentiate it from the R&D expense. And don't be confused that we're expensing it, but under 174, that Internal Revenue Code, that's where those rules come into play. So I've got a line down the middle to break these out. Again, we're going through the basics. What do you got to do? Get with a tax professional. Tax professionals, I don't know if you should act alone. If you do, hey, more power to you. I love it. Don't worry. We're going to go through a little bit here to help. So with the R&D credit, it is a permanent law. It is a tax credit. That is a dollar for dollar reduction in tax. So typically, if you were going, well, which way would I want to go if I do have a choice? I would say most of the time you would want to take the credit. Now, yes, there could be circumstances that you'd go otherwise, but all things being equal, in general, a credit typically 9 times out of 10 is more valuable to you than amortization and or an expense. So with this, what if you missed it? Because now I'm going to tell you some stuff. You're going to go, whoa, JJ, I wish I would have known. I've got to take advantage of this. So if you missed it, you can go retroactive back 3 years. Nothing special to the credit on that. That's just how long you have to go back and amend the tax return. So if you think it applies, figure it out right away to determine if you can go back and amend. So with this is on Form 6765. Why did I tell you the form number? Well, I'm going to tell you this right now. As a tax advisor, I love looking at the instructions to these forms. It's typically my go-to, my first point of reference, because it's going to tell me all the other places to go and all the things that come into play. Now, real quick, let's go back over here on the R&D under Section 174, beginning 1/1/22, so January 1st of 22, we must amortize, meaning it's required. We must amortize it. It's over 5 years. Yeah, if you're a foreign entity, you definitely need to get with an advisor. There's different rules on that. Can't cover everything. But 5 years, you're going to amortize that, and you start with the midpoint. What does that mean? Well, check this out. If you are amortizing those costs, but again, you can't expense them. You got to amortize them. Okay, you get credit or amortization. But here it is. Whatever you spend throughout the year, doesn't matter if it's in January, February, March, April, May, June, July, August, September, October, November, December. If we're now talking a calendar year-end business, right? So what's mid-year for that? July 1, mid-year, halfway through the year. You're going to take all the costs throughout that year. You're going to add those together and or do them as separate line items, but the beginning date of the amortization, okay, is the midpoint of the year. So it would be July 1st in my example for a calendar year. Why is that important? Well, because you're not going to start the amortization when the expense, the cost, was incurred or paid for depending on your basis of accounting. So that's key there. And you don't have to wait until you produce income from the R&D to start the amortization. So that's also new and nice. So with this, 174 and 41, but I want you to note this real quick, very key. And the reason I pay attention to the 41 as well as the 174 is that it kind of helps me keep these things straight. So section 41 costs, so costs that qualify for the credit, okay? What those costs are, 99.99 probably every time, you know, there's always that 0.001, right? But section 41 costs, those costs are going to qualify for R&D, okay? They're going to qualify for R&D. Why does that matter? Well, more just to say, if you have these costs and you decide not to do the credit, well, if it goes under 41, it's going to fall under 174 when you look at those descriptions and or qualifications, definitions. So the big thing, though, to note here is that because a cost qualifies under 174 doesn't mean that it automatically qualifies for 41, right? So if it's a expense here, it's a cost, it qualifies under 174, it doesn't mean it's going to qualify for the credit. So where would you start? Why am I going through that? Well, I would start by going through the cost to go, okay, what are all the costs that qualify for 41? And then of the other costs that you're considering, go, okay, well, if they don't qualify for 41, do they qualify for 174? Now you have the two categories. Why is that important? Well, because here's the thing. The IRS requires that if you have R&D going on, you don't get to decide if you want to credit or amortize in the sense of going, well, do I get to ignore it? Let me be clear on that. You don't get to ignore it. You don't get to go, well, I don't know much about it. I don't need a credit. We're not going to amortize. We're just going to write it all off. We're just going to expense it. We're not going to worry about it. But if the IRS were to come in, they'd say, well, regardless of any of that, if you're required, if you have R&D, then you've got to decide what are you doing with it, because you can't just write it off, meaning expense it. So with all of this, there's 4 factors that come into play to get this tax credit, which is 6 to 8% of the qualifying costs, which is mostly payroll. So there's a 4-part test that we're looking at here in terms of it qualifying for the credit. It must be a permitted purpose, must be technological in nature, it must eliminate uncertainty, and there must be a process of experimentation. Whoa, that was handy. So if you're in the first 5 years and you're under $5 million in gross receipts, then you can get this as a payroll tax credit, the 5 and 5 rule, if you don't have any income taxes because you're in the early years. So you look at IRS notices 24 and 12, 2363, revenue procedure 2311, 2308, but I'm going to give you a link to the IRS page that has all of this, including the forms, information, the latest on this. So with that being said, thanks for sticking with me. And if you've got any questions, email them to dearwestern@westerncpe.com. Okay, so that's how it works. Check out Western CPE's YouTube page. Please subscribe. Let them know you came from me. Check out the videos that are over there to answer the questions that are sent to Western CPE. And with that, check out also seminars, whether it's on demand. I might be coming to your town with Western CPE. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one. I'm liking this. Amanda put this together for me. Super handy. So yeah, if you got any questions related to this, you got a scenario, I'm going to say, hey, Michael, I got a great CPA friend. he can help us out with a great company. I'd consider him a national expert. Yeah, still trying to work on the lighting here. Appreciate you.